Hey all, welcome to ShareTreck. It is Sunday, and I hope you're all having a good weekend and you're in good spirits. It's 20th of February 2022, and today I want to talk to you about something incredible I saw on television. That was Cathie Wood's exclusive interview with NBC. I would have loved to make this segment earlier, but I was quite preoccupied with the daily updates and the other segments that we did. So the reason why I call it incredible is because one must admire Cathie Wood's self-confidence and belief in her own convictions, because she faced what I would think to be a very, very hostile interview. The kind of questions that were asked were very, very direct, very hard-hitting. So what I want to do in this video is just to give you a flavor of how hard the interview was. So the initial portion is going to be clips of just the questions, how hard those questions were. And then I want to talk about just a particular portion of that interview, which I have a few points to talk to you about. And then I would like to get your opinions. So let's get started.
Thank you, Scott. Happy to be here. Thank you.
It really is astounding, Cathie, when we sit here and have this conversation today. 100% of the stocks in the innovation ETF are in a bear market. 87% are down more than 40% from the highs. Those are incredible pullbacks. However, for many, it is the here and now that matters most. And some of the arguments that you've made to defend the moves that you've made in the market have been criticized. I read to you December 17th of 2021, innovation stocks are not in a bubble, you claimed. Do you still stand by that? And if so, how? Just because these stocks that you invest in have this transformational technology, Cathie, that doesn't justify valuations that are through the roof based on growth projections that are so far down the road. And this seems to be the textbook definition of a bubble. When you see a Robinhood down 84% from its high, Block 62, Teladoc 75, Twilio 59, Roblox 62. I mean, I could go on and on and on down the list. How is that not a bubble? Why such a reticence, though, to concede that some of these stocks that have suffered dramatic declines will never come back to the level at which they once were? You won't concede that? You think all of these stocks that I read on that list, plus others that are down by significant amounts as well, are really going to come back to the prior levels they were?
The way that you guys do portfolio construction, which is that there tend to be a lot of glamour stocks in your index and in your products that maybe aren't that innovative. And a couple of examples that come to mind, I was kicking the tires on your genomics fund. I can't get past the fact that Teladoc is the largest holding. In what way, shape, or form is Teladoc at all involved in genomics? DraftKings, Robinhood, these are not really innovative companies. One is a bookie and one is a fairly traditional broker that made its way by breaking a lot of brokerage rules. I don't see innovation there when I see those names, and that's why I'm not an investor as badly as I want to be. Can you talk me out of those concerns that I have? Because I think they're shared by a lot of the people watching today.
As you have seen there, the interview was pretty brutal, and admirably, Cathie Wood was able to withstand all of those questions. She answered all of those questions, except for one, the segment that I have picked up, where I don't think she answered completely. But it seems to be open season now for most people in the media to take all these high-profile fund managers into task. I'll give you another example. I'll show you my Twitter feed. Let's look at this particular tweet from Bloomberg. It says, stocks tied to serial deal maker Chamath are sinking. So my response was, all stocks are sinking. This headline is wrong at so many levels and potentially irresponsible in my opinion. Why single him out? Tesla is at 848. We were talking about Tesla at 1250, not very far ago. FB at 207, Facebook, Meta. Shopify at 678. It's almost dropped half in price. So what's the point with this headline? Basically, these things trigger our sentiments as investors, and we go and have a look at those articles. So that's how I'm looking at it. So what we have to do at this point of time, in my opinion, is to clear out the noise, look at our risk-taking capability, don't second guess your own judgment based on which you did our investment, and that's how I would proceed. And I would try to keep the outside noise to the minimum and stay the course until all these risks get unwound. It's just a matter of time. Over a period of time, things will improve. In the long run, stocks always recover and do better. The short run is very difficult for anybody to control. None of these people, even those people who have put this tweet out here, cannot predict and predict stocks and the prices and the trends. They are just reporting it out. So that's how I would look at this. So let's continue with the other segment that I wanted to talk about with regard to Cathie Woods.
I agree with you about the pendulum having swung very far. I don't know if it's all the way yet. It's hard to without the benefit of hindsight. But every time I want to pull the trigger and buy your flagship fund, ARKK, two things stop me. And maybe you can talk me and other people who are watching out of these two problems that I have. The first is not in your control, and that is the inflationary environment and what's going on with rates. If this is your strategy and you're going to stick to it, unfortunately, you're up against a headwind that is not of your making, and really there's not much that you can do about until it abates, which is that historically, go back through the last 100 years, break it down in decades, decades with high inflation were very bad for growth stocks relative to value stocks. Just look at the 2 decades with the highest inflation, the 1940s coming out of the war and the 1970s. In those 2 periods, using FAMA French indexes, value outperformed growth on an average annualized basis by more than 10%. That is an insurmountable hurdle to anybody concentrating in growth stocks if, in fact, high inflation is going to persist. Again, that's not your problem, but I'd love to hear your take on that. The second thing is a little bit more idiosyncratic to ARK and the way that you guys do portfolio construction, which is that there tend to be a lot of glamour stocks in your index and in your products that maybe aren't that innovative. And a couple of examples that come to mind, I was kicking the tires on your genomics fund. I can't get past the fact that Teladoc is the largest holding. In what way, shape, or form is Teladoc at all involved in genomics? DraftKings, Robinhood, these are not really innovative companies. One is a bookie, and one is a fairly traditional broker that made its way by breaking a lot of brokerage rules. I don't see innovation there when I see those names, and that's why I'm not an investor as badly as I want to be. Can you talk me out of those concerns that I have? Because I think they're shared by a lot of the people watching today.
Sure. Absolutely. And Josh, I heard that you had some kind words to say about us as a firm or generally. So I thank you for those a few weeks ago.
I think very highly of you.
Thank you, Josh. So on the first, inflation. Okay, my background is economics, both economics and finance, and I do have a point of view here. The supply chain issues have lasted so much longer than we anticipated that they would take a while to work out, but not 2 years. So the question is this supply chain related? And will these inflation metrics unwind? I think a lot of what's going on is supply chain related. I know it's become unfashionable to use the word transitory, and so we won't, because it's lasted longer than we expected. However, I do think there's going to that the deflationary forces that are building up in the economy today are pretty strong. 2 are secular, 1 is cyclical, and the bond market is sort of getting this. If you look at what's happened to the yield curve, so the difference between long rates and short rates, it has flattened from, I think, 155 basis points last March to 45 basis points today. And if the Fed did go 50 basis points in March, which they might, I think that it would be one and done then, we'll end up with an inverted yield curve. And then what are people going to think? Well, An inverted yield curve and the flattening yield curve says, watch out, something's going on here. Either growth is going to disappoint or inflation is going to be much lower than expected, or both. And we think both is right. And so that's the cyclical source. There's an inventory buildup. If you look at the record-breaking inventory buildup in the fourth quarter GDP report, you'll get a sense, while inventory to sales ratios might be low, as the consumer switches off here. And if you look at the last 3 months of either retail sales or consumption, the consumer has gone pretty flat. Meanwhile, you've got the double ordering and triple ordering by manufacturers and wholesalers because they were missing sales before. So I think there's a big inventory problem brewing here. And it's going to hit within the next 6 months in terms of that recognition. That's the cyclical side of inflation. The secular side has to do with innovation. So our focus is understanding cost declines associated with technology and when costs are going to drop low enough so that demand in different sectors will pick up. Just give you a few examples. So for every cumulative doubling in the number of whole human genomes sequenced in the world today, costs drop, the cost of sequencing drops 40% if you're Illumina, 28% if you're a PacBio on the long read side. Robotics, for every cumulative doubling in industrial robots, cost decline 50%. We have major labor shortages. So that cost decline will cause increased adoption and will lower the risk associated with wage inflation continuing. And then artificial intelligence costs, I gave that one, down 60% per year if you include both hardware and software. These are major, major deflationary undercurrents. The other side of disruptive innovation is creative destruction. And what does that mean? It means the existing world order, the traditional world order, is going to face disintermediation and perhaps destruction. And we certainly see this in everything: transportation, in retail. There's still a lot of creative destruction taking place.
Right.
In the healthcare space, right? So what's going to happen is these companies whose products are either going obsolete or who have not invested enough to update them, they are going to have to cut prices. So we see major deflationary forces, and I think the bond market is on to this. If I didn't see some signal supporting what we're saying in the marketplace, like that yield curve, I'd probably say, gosh, I don't know how long this is going to last. But I have a feeling these deflationary forces have entered the bond market cycle.
Cathie, I forgive me for interrupting you, but I want to move it along if I could. And as we're having this conversation, really from the beginning of the program, I can't get beyond the fact that as I hear you defend your strategy, defend your research, and say that these stocks are going to come back, and I look at our viewer questions, I think about them and the fact that this is real people's money that we're talking about here. I had a question on Pacific Biosciences. It's down 75% from its 52-week high, presumably held by the person who is putting this question forth to you. I mean, what do you say to somebody who put their hard-earned dollars into your fund and is sitting in a stock like Pacific Biosciences, which is in the ARKG, and it's down 75%?
Well, the first thing I would want to say is more than half of my personal net worth personal financial net worth is in our funds. And I have been averaging down. That's the first thing I would say. And I understand these are hard-earned dollars. They've been my life's work. And I never sold our funds, never, because I do believe in what we're doing. When it comes to PacBio specifically, talk about unbelievable accomplishments. Last night or the night before, on the earning call, Christian Henry, PacBio's CEO, told us that you know, short read technology is able to identify about 20, and this is DNA sequencing. Short read is the Illumina version. PacBio is long read. So short read technology is able to diagnose, identify 25% of the rare diseases that children get. And parents with children who have rare diseases spend on average 5 years, this has historically been the case, trying to find out, what is this? Well, short read technology can identify 25% of them. A recent study using the same analysis, going over the same individuals who were sequenced with short read, but this time with long read, they were able to identify 75% of the diseases right away. So, you know, we are talking about bringing real science into healthcare decision-making and helping parents with children figure out what's wrong with their children and what possibly to do about it. This is nothing short of miraculous compared to the state of the healthcare industry even 5 years ago, because we didn't have the technology. We couldn't identify the mutations. With DNA sequencing now that it is dropping in cost to $500 to $1,000 if you're in the long read territory, now we can do it. We can do it. So the most prestigious children's hospitals, just go talk to them about how transformational this is going to be. And it's going to be transformational for all of us. This is not about just children with rare diseases. We are all going to be sequenced. We were going to have genetic tests annually, is my guess, so that we can identify the mutations that evolve in our body from year to year. And as we age, more and more mutations do occur. And we are going to be able to prevent a lot of disease or cut it off at the pass, perhaps with gene editing, CRISPR gene editing. So this is the most underappreciated and undervalued part of innovation, I believe. And it is because healthcare and technology are converging. Healthcare analysts are not comfortable with technology. Technology analysts are not comfortable with healthcare. ARC, because Simon Barnett is our sequencing analyst, and Ali is our CRISPR gene, Ali Ehrman is our CRISPR gene editing analyst, and Pierce Jameson is our plant biology analyst. We are looking for these technologies and how they might scale as they cut across.
Are you? I mean, I got a couple questions. I know you have to go. Are you looking to replace any of your analysts based on the performance of the stocks in the last 6 months?
No, not at all. Again, we have a 5-year investment time horizon.
Okay.
The last 5 years, we have outperformed our minimum hurdle rate of return. We're somewhere in the 20s. Truth wins out in the end. What's going on right now is, I believe, a hysterical reaction to inflation, interest rates. Not because those aren't problems. They are problems right now. I'm not trying to minimize that. We think they are going to unwind during the next year or so. But we believe that these companies in our portfolio are going to deliver what today would be called supernatural growth rates, because that's how profound these technologies are.
Okay, and let me...
We've never seen a period like this in history. You have to go back to the early 1900s to see anything like it: telephone, electricity, automobile. Today, we have 5 transformational platforms involving 14 technologies that aren't being analyzed very rigorously by the traditional world, which is focused on what has happened historically.
I want to finish by asking you about a recent move that you made. You sold a...
So in that particular segment, Cathie Wood did not come to answer about why Teladoc still finds a major portion of her portfolio. So that answer didn't come, and the interviewer had to move on and go to other segments. But overall, after listening to the whole interview, I do feel that I still feel Cathie Wood is right. It's just a question of it being a long-term investment. It's not something where you're going to buy today and sell tomorrow and make a profit. So that's as clear as it is. It's just unfortunate that we have all these economic events happening right now, along with the risk unfolding across the world. So this is going to be a great investment opportunity, and I personally am thinking that when I get the opportunity, when things go further down, I would definitely pick up more of ARC-G and ARC-K potentially. ARC-G more than anything else, and do specific industry-wide pickup. And CRISPR would be one of my CRISPR Therapeutics would be one of my top targets where I might like to start a position. And Pacific Biosciences is also pretty good in my books. It's going to suffer a lot during this 1 year of raising interest rates and economic risks unwinding. But at the end of it, it's going to come out well. Either it will stand on its own feet and do well with its kits and long reads, etc., or it may be taken over by some big pharma company. Either way, the intellectual property that's being generated is going to be valuable. And personally, I think that CRISPR is going to be the way ahead. The entire medical science field is going to be reformed. Surgeries would probably not be needed more often going forward, because you can cure everything genetically, and the germline is going to get improved over a period of time, but it's going to take a while. But as Cathie Wood says, it's a convergence of artificial intelligence, robotics, genomics, everything together, and that may lead to a great deal of synergies and improvement in productivity and quality of life and how we live our lives. So that's what I have for today, my friends. I would like to hear your opinions. There are quite a few of our subscribers who definitely comment out here. I would like you guys to start a discussion. Send your comments in. How are you coping with this situation with your portfolio? Do you have any green stocks in your portfolio? And what are your strategies to handle this difficult time? If you're here for the first time, please consider subscribing for Everything CRISPR. And if you're a regular viewer, please consider putting a thumbs up sign there, a like, so that this video can be seen by other people, and they can also have the benefit of looking at this channel. Thanks and have a great day. Bye for now.